Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Q&A Night. Today is Thursday, November 9th. I'm Huang Pengrui. As we can see, today's topic is that right now, it seems like everyone is quite worried about the current market level. By the way, has everyone seen my PPT? It looks like some of you have, right? I think you have. Okay, so is it showing now? It should be showing now. Is it still not showing? Alright, now that it's working, as the title says, it seems like everyone at every level is worried about the current unresolved market situation. Maybe not extremely worried, but at least a little concerned. However, in reality, people are still buying steadily. This pretty much sums up the current state of the market. Everyone seems to think the market is a bit too high right now, but that worry doesn't really reach the level of being extremely anxious or deeply concerned. So basically, it's kind of like people say they're worried in their hearts, but in reality, they still go out and buy stocks, or they stay active in the market. So that's the current situation, and next, we'll take a closer look and discuss some details. So for this week, actually, tomorrow there should be some consumer data coming out, and we'll take a look at the forecasts for that. As for today, the unemployment claims data probably won't be released. But tonight at 8:30, there will be a speech, and I'll talk about that as well. We'll see if the speech touches on anything related to consumer spending. The subsequent developments, as well as future views on the economy, will definitely have an impact on market sentiment. Right now, it's basically showing a steady upward trend. At the moment, it's still an upward pattern. But looking at the chart, let's first take a look at the US dollar index. Currently, the dollar index is also showing signs of rising, even in the absence of much new information. So, looking at it now, everyone seems to think that this upward trend might continue for a while, because the current US dollar index measures the dollar against 6 or 7 major developed countries' currencies, and recently, these currencies have all shown similar movements. There are signs of depreciation tomorrow, and correspondingly, the overall performance of the US right now is, generally speaking, still showing no major weaknesses compared to other countries. That is to say, even though there is some internal turmoil or possible economic slowdown, for now, the overall tone hasn't completely shifted. So at the moment, the dollar still seems to have some support. As for the Fed's interest rate policy, just like we discussed a few days ago, it seems a bit volatile right now, and at the moment, we're still waiting for a clearer direction. So you can see the 10-year yield is fluctuating around this area, and the 30-year yield is also moving around here. As for the 2-year yield, it's the same. It's also within this range, just continuing to fluctuate in a narrow band. Alright, let's first take a look at the changes in the stock indices. Yesterday, there was a clear upward trend. Recently, we've mentioned that the overall M structure is still changing, but you can see that this upward movement isn't significantly different from the previous day's decline. In other words, even though it closed higher, the rise was mainly due to the drop the day before. And since it started from that point and then went up, you might look at the upward trend and think it seems pretty good. But if you look at the structure, you'll notice that it might start to enter a bit of a consolidation phase. Currently, the Dow Jones appears relatively weak, while the Nasdaq, on the other hand, is showing a bit more strength. As for the S&P 500, it basically recovered the losses from the past couple of days. So right now, I'm watching to see if there's enough momentum for it to keep moving up. But at the moment, it looks like these next few days are more likely to be choppy. Next week, earnings season will begin, and after that, everyone will be paying closer attention to how companies perform in their reports. With earnings season as the backdrop, there will be more clues to watch for. But overall, it's just that. These are very short-term market fluctuations. Looking ahead to the next few months, it still seems like the market is in an upward trend. The bull-bear narrative hasn't been broken yet, especially the AI story. So you could say the AI narrative remains unchanged, and the outlook hasn't really shifted. So for now, things look the same as before. Next, let's take a closer look at more details. First of all, let's talk about global developments, starting with China. On the tech front, China has tightened its rare earth export controls. This is actually pretty significant, because as we mentioned on Monday, rare earths are something that the US, Europe, and even countries like Australia are determined to build their own supply chains for, to become self-sufficient. They've been pretty dependent on importing rare earths from China, so now there's this determination to change that. But it might take them 5 to 10 years to really get it done. Actually, a few months ago, China loosened its rare earth export controls, but now they've tightened them again. And this tightening is actually pretty broad in scope. It even covers related products manufactured overseas. In other words, it stipulates that it's not just Chinese products that can't be exported or need to go through review. If you're producing something overseas but it uses Chinese technology or components, then you're also subject to Chinese regulations. Right now, exporters need to obtain a license before they can export. So, the items that cannot be exported without a license include rare earth mining, smelting and separation, metal smelting, magnet manufacturing, as well as secondary recycling and utilization technologies, among others. Additionally, if it's for military use, basically, you won't get approval. And if you're involved in R&D, for example, if you're producing chips at 14 nanometers or below, or memory chips with more than 256 layers, as well as semiconductor equipment and materials related to these processes. If these are subject to approval and taxation, it basically means that their export is even more blatant. It's openly tied to military and technological applications. I don't think rare earths are just a simple mining resource. So now, China's stance and attitude have actually become even tougher. So that's the current situation. Actually, when we look at exports, there are a lot of implications. It's not just about the physical export of goods, it also includes things like IP, technical cooperation and exchanges, consulting services, or even temporary exports, all of which are considered part of the export process. So next, actually, it's about China at this particular point in time. There are these kinds of situations, like with smartphones, which make it very difficult for other countries to establish non-China supply chains. Especially right now, compared to China, other countries are still relatively less developed in this area. If China now decides to take this action, it will significantly increase the difficulty for other countries to establish a rare earth supply chain. Of course, the timing of this announcement is also quite special, because as we all know, at the moment, according to reports, Trump and Xi Jinping are very likely to meet in mid to late October. So, before this meeting, taking such a tough stance is really... Some analysts and businesses say that he just wants to take a tougher stance before the meeting, to see if he can gain some better bargaining chips and achieve a better negotiation outcome. In addition, as we mentioned, this is the first time that rare earth exports have been linked with semiconductors, AI, technology, and even the military. Overall, it's not just about controlling raw materials, it also involves controlling technology, equipment, and end use. So, regarding the follow-up bans, we can keep an eye on them. Against this backdrop, U.S. rare earth concept stocks and related commodities have seen a significant rise. Now, we can see that this upward trend may be a long-term one. We've mentioned this before, and on Monday, we talked about a lot of individual stocks. So today, we're going to introduce an ETF, and that ETF is REMX, which is a rare earth ETF. This rare earth ETF includes rare earth companies from all over the world, but it's mainly focused on the US and Europe. You can see that it includes the North American companies we mentioned on Monday, as well as others. NP Materials is also included in this ETF, as well as the only company outside of China that can export heavy rare earths. This Australian company, LYNS, is also part of it. Within the ETF, it holds the second largest weighting among the components. So you can see that the ETF's performance is relatively stable, and right now, even in pre-market trading, there's a noticeable increase. If you look at the weekly performance of individual rare earth stocks, their price swings are much larger, and they often behave like stocks did in the past. So if you're interested in rare earth concept stocks but aren't sure which one to pick, you can just look for this kind of ETF. An ETF will give you a more diversified basket of products, so overall, you'll benefit from the broader development trend. This investment direction is relatively straightforward and clear. Alright, next, looking at global developments, today there are rumors that Israel and Hamas might reach an agreement, or that an agreement has already been reached, and now all sides are celebrating. So, about this, actually, Hamas might release all the hostages, and the Israeli army would gradually withdraw from Gaza. However, the follow-up governance and reconstruction issues haven't been discussed in detail yet. For now, it looks like there will be a first-phase agreement, which is to stop the fighting and establish a ceasefire, and then both sides release the hostages and prisoners, and then have further discussions afterward. So, what's happening now? It's because this temporary situation has already lasted for 2 years, so there's a chance to move into the next phase. It seems like both Israel and Hamas are exhausted. In other words, both Palestinians and Israelis don't really want this war to keep going. If we can move into the next stage, that would be a big deal, and it would extend the period of stability for a long time. That would mean that the pressure point from the first round of policies would disappear, so there's hope for easing tensions. Right now, globally, the geopolitical situation is relatively tense, so this would be a good thing. In addition, starting last night, Macron announced that he doesn't want to call for a re-election, nor does he want to resign. Instead, he plans to appoint a new prime minister. He's given himself 48 hours to do this, so by Friday night Taiwan time, the new prime minister is expected to be announced, so that's tomorrow. If he really does appoint a new prime minister, I'll track it with everyone tomorrow. Now, this prime minister, this rational choice, needs to be accepted by all sides, and he can't just be someone who might. In the past, the people Macron picked always leaned a bit toward a certain side, so right now, the major party in this power struggle, the Socialist Party, will definitely have some dissatisfaction. Now, there's another possibility. During his second term, Macron wants to push for pension reform. And then, to optimize France's finances, address the deficit, and so on. But right now, the pension reform is actually facing a lot of controversy, and he's also trying to preserve this particular reform, which he sees as his own political legacy. As for the prime minister, if, moving forward, they really can form a coalition, then, and pass some budgets, they'll still have to deal with the current deficit and debt issues. So the prime minister's responsibility is actually quite heavy. Honestly, no matter who comes to power, France right now, the responsibility, or rather, the situation is relatively tough. So we'll have to see how things play out going forward. If France's political situation continues like this, some sectors, like animation, will be the first to feel the pressure, and this will later affect stock market performance. In addition, the IOF today, after the Bank of England issued a statement expressing concerns that AI-related stocks are currently overvalued, the IOF also made a statement. They believe that, globally, the economy will only see modest growth this year and next. So, what about now? If there's any kind of shock, it could test the resilience of the global economy. Because if you haven't seen much growth in the past 2 years, and then a shock hits, it's very likely you'll slip into a recession. Right now, there are a lot of warning signs. He thinks gold prices are relatively high, the effects of US tariffs haven't fully shown up yet since it's only been a few months, and a lot of things keep getting delayed. It's still too early to assess what the full consequences will be. In addition, stock valuations are very high. So, these 3 things are warning signs. Next, he mentioned that he thinks the current environment is relatively loose, but no one knows how long this looseness can last. Plus, this loose environment could reverse very quickly. So, he said that right now, one thing is that economic growth won't be very fast. So, in this context, any shock could make the economy likely to go into recession, or at least slow down. Right now, what we're seeing are some warning signs in the market or in trade, and one of them is overvaluation. So, what we're seeing now is that a lot of people are starting to talk about this. Stock valuations are too high. This idea is about the current level of the market. Alright, next, let's first take a look at what's happening with the US government. So, on the government side, today there are reports that the US government has approved the export of chips to the UAE. This export is actually quite a big deal, because during the Biden administration, there were export restrictions on the UAE and Saudi Arabia because they maintained relatively good relations with China. The US was concerned that if these chips were exported to you, China could also end up using them. Currently, Trump's position has changed, although some believe that this will have an impact on China. If you export American chips to the whole world, then in fact, you're giving China more opportunities and room to maneuver. However, the prevailing argument now is that if the US can leverage this technology, if American technology spreads everywhere around the world and everyone adopts it, it can help maintain the US's dominance in AI. So right now, this viewpoint is prevailing, and government policy is moving in this direction as well. As for now, in the future, the US will. It is expected that every year, 500,000 GPUs will be supplied to the UAE. In return, the UAE will invest $1.4 trillion in the US over the next 10 years. Supplying 500,000 units is quite a lot. So what does the UAE want to do? They want to build a 5-gigawatt data center in Abu Dhabi. The US has stated that the operators of this data center, as well as the software providers, will all be controlled by American companies. So that's the current situation. It looks like in the future, the US will be deploying more and more in the Middle East, and the Middle East will also become the next global center, whether for trade or technology. In addition, there's also weather goodbye. Wasn't there a conservative activist, Charlie Cook, who was killed? After he was killed, actually, Trump ordered his domestic counterterrorism units to start focusing on internal terrorists. The main point is that they believe there are people within the government. What are the characteristics of these terrorists? They might oppose America, oppose capitalism, and also oppose Christian ideology. So, in this case, it's actually pretty clear their enemies are mostly the left or liberals, so liberal groups and their donors. Even organizations that are just mining pools can become targets of their attacks. One example is the Open Society Foundations. Although the Open Society Foundations claim that they have never funded any violent activities, they are still targeted by the government in various ways. So now, what's the situation? I haven't seen Trump continuously sending troops into various cities, so what exactly is he trying to do? On the surface, his stated reason is to crack down on immigration and deport illegal immigrants, and so on. But what he really wants to achieve, of course, that's part of it, but besides targeting immigrants and illegal immigration, there's also the aspect of retaliating against political systems and suppressing the opposition. So, what can he use to strengthen the legitimacy of these actions? Since he's not actually sending a lot of National Guard troops to different cities, sometimes there are protests, and during these protests, there might be some violent incidents. These violent incidents can then be used by the government to claim, see, our National Guard really does face violent problems. This is exactly why we need to send in troops to resolve the situation. So, through this, these protests can actually increase the legitimacy and justification for their law enforcement actions. Alright, next let's keep paying attention to the situation on the government shutdown. Right now, actually, Reuters has a poll about who should be held responsible for the government shutdown. You can see that most people think both parties are responsible, and Trump is also responsible. So, as we can see here, the Republican Party is under more pressure, and recent polls reflect this as well. If the Republicans are to be held responsible, then Democratic leader Schumer has pointed out that the public is now seeing the seriousness of healthcare costs, and prices keep rising. He believes that the Democratic Party is standing with the public. This time, the Democrats have shown a very united stance on this issue. As we've mentioned before, they're focusing on healthcare, because healthcare is a matter that's closely related to people's livelihoods. But when it comes to a government shutdown, there are no winners. So right now, you can see that the public also holds Democrats to a high standard of responsibility. At this point, for everyone involved, that's just the reality. If the government can reopen quickly, then these issues or related delays can be avoided, and the release of important data can also resume. That's the current situation. Alright, let's move on to market trends. The meeting minutes were released yesterday, so let's discuss them. The main takeaway now is that this year's FOMC is willing to continue cutting interest rates. However, they are still concerned about inflation. This means that even though there are some worries, they still want to cut rates. Additionally, they emphasized a dual mandate, aiming to balance both the labor market and inflation. So, the certainty and outlook for rate cuts right now aren't that strong. Having this level of certainty means that I expect to be able to write like this very soon, or that right now, the FOMC needs to act quickly and decisively. This is actually a direction. At present, although everyone agrees with this direction, there is still some hesitation. Another point is that the balance sheet reduction may be nearing its end. This could have some restraining effect on the market or liquidity. Currently, policymakers are still working hard to respond to this. It's just that, as John usually points out, these kinds of risks exist, so overall, as long as this meeting aligns with market expectations, there's nothing out of the ordinary. It's just that there might be some unexpected aspects for everyone, so overall, that's how things are written for now. There haven't been any major changes in the preview or the subsequent path of development, so the focus is on whether there will be any new information in Powell's speech tonight. Next, this article mentions that currently, there is a type of hedge fund whose their positions in the stock market have started to increase. This is similar to hedge funds that use global macro strategies. Originally, they had a negative sensitivity to the stock market, meaning that if the stock market went up, their returns might go down, or there. The likelihood of this kind of downside is increasing, and this reduced negative sensitivity means that their positions in the stock market are increasing. So right now, it's basically like this. Originally, this type of hedge fund might not have been so optimistic about the stock market, but now they're relatively more bullish, they're more optimistic about the stock market. So in practice, even though we see a lot of concerns and articles about bubbles, when it comes to where people are actually putting their money, instead, people are continuously putting new money into the stock market. And in addition, he mentioned that, according to another set of statistics, which we'll see in the related chart in a moment, he said that the current speculative bullish positions in the market are still at their long-term average. Meanwhile, short positions have been slowly declining since April. This points to two things, but both indicate the same direction. So, the result is that there's still room for further gains ahead. The fact that bullish sentiment is at its long-term average, not above it, means that the enthusiasm for going long isn't particularly strong or heated yet. Right now, it's actually just at a moderate level. That means there's still room for the market to go up in the future. So, in addition, here you can see that short positions have been slowly declining since April. This means that the bears are being relatively cautious, gradually reducing their short positions. Shorts aren't disappearing quickly, and neither are they rapidly switching to long positions or moving their funds to look for the next possible investment target. Right now, it's just the short positions. The slow decline shows that people are still. There have been about 6 instances of short positions, but they're just being reduced gradually. So, in other words, the current sentiment hasn't reached a really crazy level yet. That means, looking ahead, there's still room for growth. The good thing is, right now, you can see that. That is, asset management companies and those leveraged funds, their positions are currently at a long-term average level. You can see that since 2024, there's been a noticeable decline, but going forward, if these positions start to rise again, then the market also has a chance to move up again. Alright, so for now, let's continue to look at. Another bubble concern comes from, well, JP Morgan CEO Jamie Dimon. He mentioned in an interview with Bloomberg that he believes the risk of a US stock market downturn is actually higher than what the market currently expects. So, when might this correction happen? It could happen sometime in the next 6 months to 2 years. Actually, the time frame he mentioned is pretty broad, so he didn't specify exactly when it might happen, just that it could be in the next 6 months or within the next 2 years. The range is actually quite wide, but he believes that at some point in the future, this bubble could burst and stocks could see a significant drop. He also mentioned that he is more concerned about a major correction than most people. Looking at the current situation, it seems like everyone has some concerns. So, everyone can take his views as a reference. In addition, he mentioned that he is currently a bit concerned about inflation in the US, but he believes that the Fed can maintain its independence. That's his position. Next, Bloomberg mentioned that the current stock market growth is actually, that is, current profits are not enough to support the present stock price levels. This means that stock prices have risen a lot, but profit expectations or expected profit growth haven't caught up yet. As a result, stock prices are running ahead of profits, so there is a possibility that stock prices might pull back. This is just Bloomberg's perspective for your reference. In the coming quarters, there will be 2 possible scenarios. One is that profits catch up, meaning the forecast for profit growth increases and actual profits also go up. The other scenario is that the stock price starts to consolidate. Next is Bank of America, which pointed out the following. Recently, they interviewed some of their clients and found that clients have been moving funds out of large-cap stocks. However, instead of shorting or hedging, they're reallocating into small-cap stocks. This explains why, in the past few weeks, small-cap stocks have been soaring like crazy. It feels like a lot of stocks have seen huge gains. That's the situation right now. Right now, let's talk about this. Just now we saw the Bloomberg MSCI World Index chart. So, what about this world index at the moment? The profit forecast for next year is about 12%, but the index itself has already risen 30% from its low in April. So, at the moment, you can see that the stock index keeps going up, while the profit forecast hasn't really changed much. That's the current situation. So, based on most of the data right now, we can say that even though people are expressing concerns in their opinions, attitudes, or outlooks, when it comes to actual capital flows, things are still holding steady. There is still ongoing investment and continued participation in the market. So, this is the current situation. Even though people are still a bit worried, it's not that they're not investing at all. In fact, they are still investing and consistently buying stocks. In addition, Citi mentioned that At present, the volatility of individual stocks is actually at the 35-year average, which means this level of volatility. So there is a certain degree of volatility, and in addition, the level of volatility for individual stocks is higher than the overall volatility of the S&P 500. Right now, the overall volatility of the S&P 500 is very low, it's at a 35-year low. So what does this mean? It means that currently, as we mentioned today, individual stocks are currently relatively active and in higher demand, but the broader market itself actually doesn't have that much of this kind of implied volatility, or in other words, the overall volatility is relatively low. But this could also mean that, at the moment, if you look at the market as a whole, there isn't much volatility. The individual stocks might be experiencing significant swings, but that gets masked by the overall market, which appears relatively calm. So once there's a significant move, or if there's a broad market correction, the index could become even more sensitive. That's why this article, which is related to bubbles, is reminding everyone to stay vigilant and keep a high level of awareness. Alright, next up, here's another one. Another warning about a bubble. This one comes from the author of The Black Swan, Nassim Taleb. He mentioned that right now, investors need to be prepared because of issues like US debt and structural problems such as reliance on immigration. This preparation is meant to help deal with a potential stock market crash. He believes that US debt is an irreversible problem, which is the same view as Ray Dalio's. In addition, he also mentioned that the US is highly dependent on immigration. Now, with Trump's new policies, if H-1B visa applicants are required to pay 3 million TWD, this could significantly reduce immigration. This would impact America's innovation and welfare, or its research and scientific capabilities could quickly decline. These kinds of issues are actually structural problems in the US, and the stock market could potentially crash hard, so everyone should be prepared. That's the current situation, this is his perspective. He also mentioned that, at present, the risks are white swans. So, what are white swans? Everyone can see them, but chooses to ignore these phones. Actually, the current situation seems a bit like this. Let's recall what we talked about a few days ago. When discussing market changes, we mentioned that many tech companies led by Huawei are starting to inject capital into various companies. They invest, and in return, secure chip purchases, creating a tightly linked chain, one link after another. It looks like this is a cyclical economic system. Of course, everyone can see its advantages as well as its drawbacks. But right now, we're choosing to ignore the downsides and focus on the benefits. This is a bit like the current white swan situation, meaning everyone can see these risks. Every time I talk about what consequences might arise in the future, or what could happen if things go in the wrong direction or develop in an undesirable way. But right now, we're not really that worried about it, and that's the current state of the market. Now, the author of Black Swan is also quite interesting, because he works for a company called Universal Investment. So, what about the company he works for? Actually, he is Han Chinese, and he is optimistic about the market's future performance, because he still holds a positive outlook on the market. However, he himself emphasizes that, even though his company is optimistic about the market's future performance, everyone is stressing the importance of protection. So this is the current atmosphere, meaning people are starting to worry and realize the need to take some protective measures, but overall, emotionally or in terms of capital allocation, they are still looking for opportunities in the market. Alright, so actually, moving forward, we can also see that overall, at the moment, it's because these high valuations have lasted for a while. And in the past, we've seen that the market could still go up even further. So, in this case, valuation itself might not be a problem, and people may gradually come to accept it. After accepting this, the next question is, with these high valuations, what will happen next? Basically, you need to have the capability or performance to justify these valuations. So everyone will shift their focus from valuations to the resilience of companies and the outlook for interest rate cuts. Because as long as the prospect of rate cuts remains, it can continue to support economic performance and provide a safety net for the market. Beyond that safety net, the key is to pay attention to changes in the resilience of the companies themselves. So, in the upcoming earnings season, the performance of each company will attract a lot of attention. People will be looking for any cracks in the narrative or signs that might indicate a recession. So right now, investors might have doubts about the rally and feel a bit uneasy, but at the moment, there's no clear reason to sell. That's why everyone is still in the market, and for this reason, we haven't seen any major changes in the market so far. The overall structure is shifting, and this trend still looks upward. Plus, if you look at the Philadelphia Semiconductor Index, it quickly recovered the losses from the past couple of days. Next up is TSMC's announcement. Today they released their September revenue and third quarter revenue. The third quarter revenue exceeded expectations by a wide margin, and September's revenue was also relatively strong, with year-over-year growth surpassing 30%. Specifically, it was 31.4%. The company's growth stage demand mainly comes from long-term commercial manufacturing needs of American tech companies. So, looking at the current situation, whether it's in various areas, different projects, or demand, and even in terms of actual revenue, things are looking good. Given the data that's been released, things are still looking relatively good. As long as tech companies continue to invest, the current outlook remains positive. This AI narrative, or rather, the driving force behind the stock market's rise, won't stop. So, when will this momentum start to slow down? As for TSMC, they'll have their earnings call on October 12th, which should provide more details. And today, before the market opened, Delta also released their financial results. The company mentioned that their Q3 profits are better than expected, and their full-year profits are also above expectations. This means that overall, their profitability is better than people thought. However, these expectations were set at a relatively low level, so when the actual numbers came out, they exceeded those expectations. This is a common practice we're seeing right now. As for demand, they observed that passengers' current financial situation is relatively good, and there hasn't been any sign of demand dropping off. So, at the moment, we can see that overall in the US, and we might see this with other companies later on, but for this company, Delta, they mentioned that demand is still relatively stable right now. So this is Delta's stock price. As for Delta, we'll see in a moment that its pre-market trading showed a certain increase. Next, we'll look at other consumer-facing companies to see if their statements will also show us that the economy still has resilience and that consumer spending remains strong. That would mean things are holding steady for now. Now, to see whether the AI narrative has been broken actually, we can look at an indicator, which is Nvidia's stock price. At this point in time, it's not necessarily a good idea to invest in Nvidia, because its valuation is already very high and there's limited room for further growth. Of course, the changes in its stock price can serve as a reference for us to assess whether the market structure or its direction is starting to shift. So what's been happening recently? Well, lately, a lot of institutions have significantly raised or set new target prices. Even though Nvidia's current stock price has been consolidating for a while, you can see this reflected in the details of the chart. On this particular day, many institutions raised their target price for Nvidia, and the highest target is actually close to the current price. There's still quite a gap between the stock price and the target price. So right now, we can see that overall, in the past few days, tech stocks have continued to rally strongly. Especially with AMD, on the first day, it had a big drop with a large black candlestick, but then it quickly recovered with a red candlestick the following day. This is mainly because many analysts and institutions are still reiterating or even raising their outlook on AMD, which has boosted market confidence. So, looking at it now, it seems that institutional investors are not seeing the market as being in trouble. The structure of major shareholders and the overall trend are not expected to change. So, looking ahead, we'll see if the stock price can continue to maintain a steady upward movement, or at least remain in a consolidation phase. If that's the case, it actually provides some support for the current AI narrative. Alright, next let's take a look at something Morgan Stanley mentioned. We can also use what they said to think about whether this market can continue to go up. What did they mention just now? They pointed out that currently, in terms of computing power, we're seeing various companies making large-scale investments in computing power to seize these resources. So, a definite reality in the future is that computing power will grow exponentially. There will be a whole lot more computing power. And when there's that much, to what extent? To the point where the capabilities of models might make a nonlinear leap. And this thing. If the capabilities of my models really do make a nonlinear leap, then we could reach a future that we can't even imagine right now. In other words, it's possible that, in terms of problem solving, under the backdrop of such a significant leap in productivity, its performance will show this kind of explosive, leapfrog growth. And this could impact both the current market and its future performance. And this could also be the reason why the market might continue to rise in the future. What I mean is, future applications or future models, their capabilities, or you could say their power, could go beyond what we can currently imagine and become something unknown to us. That unknown could be far beyond what we currently understand. So this topic will continue to leave room for the market to grow. But there are also risks involved. What are those risks? The risk is that, let's say we keep investing in computing power, just pouring more and more resources into it, and then we watch to see if the model can perform better with even greater computational power. But as we all know, whether it's learning or athletic performance, sometimes you hit a plateau. You might practice really hard and make progress, but then you reach a stage where you just can't break through anymore. Maybe after some time, or if you find a new method, you can make another breakthrough. That's what we call hitting a wall. So, everyone, what people are discussing now is whether training models will also hit a plateau. In other words, even if you keep increasing the computing power you put in, the model's performance might stop improving accordingly. If that happens, it could be the biggest risk. But as of now, there are already papers on large-scale training, but so far, they haven't observed this kind of plateau happening with models. At present, it seems like models might not hit a wall, because they're not human, they're machines. That's the thing, they follow certain rules and can consistently produce output, so basically, that's how this thing works. The input and output are relatively predictable. So far, we also haven't seen any signs of model collapse. So, when we talk about the possibility of nonlinear breakthroughs in computing power or models, that's something that could exist. In the future, it's possible that the stock market continues to grow, and this provides a solid basis. It also gives us some directions for investment. As for those investment directions, they mainly revolve around the AI infrastructure and the China-US supply chain that we mentioned today. So why focus on the China-US industry? Because the trend of decoupling between China and the US is very clear for the future, meaning the US will have its own supply chain, and China will have its own supply chain. Both sides' supply chains present investment opportunities. Next, Huawei is an adopter of AI. These companies might be the software companies we've mentioned before that collaborate with OpenAI, like GNU, Figma, and so on. After that, there are also these kinds of companies. Land, energy, and certain types of infrastructure, these are hard assets. They won't disappear just because of the development of AI. These things are a fundamental need, so we'll always need to use them. That's the current situation for investors, and you can take this as a reference to make your own decisions accordingly. When it comes to stock selection and asset allocation, in the end, we all probably need to adapt to this new market. The reality is that right now, people might think prices are already very high, valuations are high, and it seems like there's no reason for them to keep going up. But at the moment, as we just mentioned, there are a lot of different perspectives. Whether it's concerns about a bubble or the reasons people are still optimistic, it seems that in this context, the market still has room to grow going forward. We probably need to accept this reality first, and then, within this context, look for investment opportunities. At the same time, we should also pay attention to the risks that could come from a market reversal or unexpected shocks. That's the current situation. Alright, next, let's take a look at the stocks that are showing strength and weakness. At the moment, you could say that the main stocks before the market opens are still pretty strong, but Nvidia and AMD are both up in pre-market trading. As for Tesla, it's down a little bit. Now, let's take a look at Delta, which we just mentioned. Right now, it's up nearly 7% in pre-market trading. And as for Google, it closed higher yesterday as well, while Meta is down slightly. Let's briefly look at the stocks that are up and those that are down separately.
So, aside from Delta's increase, companies like Unity in the US are also seeing corresponding gains.
At the moment, it looks like SMCI is down in pre-market trading, showing some decline. But let's see if it rebounds and turns positive at the open, since right now, actually, Dell is doing quite well, and if things continue, there's a chance that SMCI could also see increased demand and rise as well. Because that's the overall situation.
Let's just look at the volume directly.
We can see that if you look at the volume, a lot of the high-volume stocks are low-priced stocks. And with low-priced stocks, even a small change can lead to a big percentage increase. So right now, it shows that the overall market sentiment is still pretty good. So overall, people are still so everyone is still continuing, just like we said. You might need to get used to this new trend a bit and make the necessary preparations, whether practical or new ones, and keep participating in the market. Alright, that's all for tonight. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.